just share a whole playlist. So, many people are having exams in next 6 days, 7 days. You can go through it. Okay. So in filing status, what major things you need to remember is what is the deadline for filing the tax return. For our 1040 filing deadline is what? 15th of fourth month. Let's say you are having a calendar tax year. So as of 31st December, your year is ending. So it will be fourth month or 15th date. So that will be 15th April. So simple one line question will be there on the filing deadline for 1040. For also they might ask the filing deadline for estate, for your final descendant tax return. So make sure to remember the deadlines, right? Second thing is, yeah, easily you can get an extension, that is automatic extension for next 6 month. You get an extension. The form is 4868. Now, before filing your extension, you have to pay all your estimated taxes. Okay, estimated taxes. So in this chapter, we are going to understand how to calculate the estimated tax liability. There will be definitely a one question, a calculation question based on that. Okay. So see, in the next page, you will see the calculation part. But before going to that, let me explain this thing. If a person who is in the combat zone or any contingent or a remote zone, then instead of getting a 6 month extension, they will get an automatic extension of 180 days plus 3.5 month extra. So they will have total 105 days of the extension from the last day of the combat zone. Let's say someone is working in a military zone or a remote area where it's impossible to file the return from there. The internet connectivity is not there, some very remote area is there, combat zone is there. Then what will happen? Instead of filing on 15th April, they get an automatic extension of 180 days. That's okay. Along with that, 3.5 months from the last day in the combat zone. There won't be any question on this, but just remember 3.5 months from the last day in the combat zone. When the person is returning back to the normal area from that, let's say 1st of Feb. Okay, from that day you have to calculate 3.5 month. Okay, that will be considered as your return filing deadline. And on that day also, if you're not able to file, it can get automatically extended to 180 days, right? Now, if this date is before 15th April of the respective year, the due date will be 15th April. So let's say this date is coming before 15th April, right? Then the deadline will be 15th April. If this 3.5 month is falling after 15th April, then the due date will be last day in the combat zone plus 180 days plus 105, not 105. Here it is just 3.5 month. Okay, so total, actually 3.5 is that only. But you just need to remember, if it is falling before 15th April, let's say once you calculated the whole 180 days plus 105, it is falling on, let's say, 3rd March. Okay, so they will extend it and make it till 15th April. Are you clear with this? Okay, and if it is falling after 15th April, then you have to do the normal calculation, 180 days plus 3.5 months. Clear, guys? Next is individual outside the US or military zone, and they are maintaining the main place of business outside US. So for them, the automatic extension is 2 months from 15th April. That will be 15th June. So that's why those who are non-resident, do you remember yesterday's session? Non-resident, if you are there, then you have to take a deadline as of 15th June if you do not have any wages income. But yeah, if you have a business income, if you have a interest income, if you have a passive incomes, then being a non-resident, for you, the filing deadline is 15th June. So please remember all the deadlines for all the categories. Okay, there can be a one-line question, not that much in detail. But yes, on this topic, there will definitely be a question or calculation question in a tabular format. If you guys remember, in regular class, I took this topic, I took an example of on this topic, I think, yes. So yes, I think Madeline asked me some question on this over WhatsApp, that it is 90% of current year tax liability. What is the minimum estimated tax you should pay? It is 90% of your current tax liability or 100% of your previous tax liability, whichever is lower. Okay. Now, if you do not have any withholding, no need to pay. If you do not have any income at all, if your taxes are coming less than 1,000, then you do not have to pay any estimated tax. So make sure to remember this thing, that minimum $1,000 is the amount for which you have to pay the if it is there, if your tax liability is minimum 1,000, then you have to pay the estimated tax. It is straight away 90% of your current tax liability and or 100% of the previous tax liability. Okay. Now, do you remember one question I have solved in the class, that there will be a tabular format? What is your actual total income, total taxable income, current year tax liability they will give you, previous year tax liability they will also mention. Okay. So also they'll mention how much withholding is already done. Okay, they'll not give you the income, in fact, but this all things will be given. Okay. Withholding will be given, like till now how much withholding is done. What do you mean by withholding? Already your employer has deducted your payroll taxes, or if you have received any interest or dividend, already some amount has been paid to the IRS in the form of tax. So already some withholding is done on your income. So let's say your current year tax liability is 10,000, previous year tax liability was 9,000, let's say, and withholding is done in current year, the withholding is done for $1,500. Okay. So they will also give you the amount, how much estimated tax the person actually paid. Estimated taxes were just let's say 6,000. Okay. Now you have to figure out whether he will be liable for paying extra taxes or not before 15th April, right? How you're going to calculate is, take the current year tax liability, right? Multiply it by 90%, or previous year tax liability multiply by 100%. So here it is 9,000, or 9,000 is the same. Let's take this 8,000. Okay. Let's say this is 8,000. Whichever is lower means you should have paid estimated tax of $8,000. But out of that, already the withholding is done for 1,500. So how much extra still you need to pay is $6,500. Okay, this much extra still you have to pay to the IRS before 15th of April. Are you clear with this? Okay. Now, please remember that they will not give you only one scenario. They'll give you 3 or 4 case scenarios, right? So based on that, your MCQ answer will be based on whether the person has paid enough estimated taxes or not. So here the person has paid only 6,000 till now. So extra the person should have paid 500 more, else he will be liable to pay the penalty for underpayment. Okay. And make sure that before filing the extension, before filing this form, your all estimated taxes should be paid. Clear, guys? So you need to remember this calculation. It's important from exams point of view. See, whichever is lower, you will compare it. Greater than the withholding and credits, then estimated tax you need to pay. If it is less than withholding and credit, already your withhold, let's say this withholding is done already for 7,500. It is already over withheld. Then you don't have to pay any estimated tax over and above this. Okay. Clear, guys? So what are the due dates for paying the estimated tax? Every quarter you have to pay it. So from Jan to March, the we usually do the projections in practical life, like projections are done, and based on your estimated income, you're going to file it on 15th April, then 15th June, And then from June to August, it will be 15th September. From September to December, it will be 15th January. And if you are still not paying till 15th January, you can pay it before filing your tax return, that is till 15th April. Okay, but if on 15th October you are extending your tax filing deadline and you forgot to pay any estimated tax on this date, you need to pay the penalty, because the rule is minimum 90% or 100% of previous tax liability, whichever is lower, this much you have to pay in advance. Clear, guys? Next is estimated tax penalty calculation is there. This is a stepwise calculation. You can follow this step or you can just remember this table. That's fine. Lower of 90%, or if your AGI is, yeah, they'll also give you the AGI, not the total income. There was one more column. AGI column was also given. That if your AGI is within 150,000, then you have to take 100% of previous tax liability. But if it's more than 150,000, then you have to take, instead of 100, you have to take 110%. Clear? So, and then you have to take the whichever is lower part, and then move to check how much withholding you have done. If the withholding is enough, then no need to pay any extra estimated taxes. Clear, guys? So is there any doubt in this topic? I think Marilyn asked me, but it is clear now that it's 90%. I think it was wrongly calculated at that time. 90, 100. It was reversed, but it's 90 for current year. Okay.
Yeah, thank you, Siddhi.
Yeah. Anything else, guys, from this topic? Next is tax due and overpayment. So there are payment plans. So let's say you're not able to pay your taxes. This will come in detail in your part 3, but a little bit of from the penalty point of view, it's there in the part 1 also. So if you're not able to pay the taxes, they will offer you, IRS has the option, you can go for a short-term payment plan or a long-term payment plan. Okay, now what exactly is the short-term and long-term payment plan? You can pay your taxes in 120 days or less. Okay, and if you're going to own less than 100,000, then only you can go for short-term payment plan. You can apply for a relief means like you will be saved from interest and penalties for paying the amount in the installments. So they will give you an offer. No need to pay any user fees if you're going for a short-term payment plan. User fees means online, if you're making an application, there is a user fees, right? And the payment can be through a direct pay, EFTPS, check, or money order, or debit or credit card. So whenever you are opting for, let's say you're buying something on installment. So what happens? You give them the credit card information. It will get auto debited from your account, right? So same way over here, while entering into this short-term plan, you have to provide them the details. Through that, it will get directly deducted from your bank account automatically. Within 120 days, there will be a certain payment plan. Okay, and this is called as a taxpayer relief initiative. You can also use the another option. Instead of 180, you can use instead of 120, you can use 180 days if you're going to own less than 250,000. Okay, and then set up this plan without providing the financial statement. Do you know anything about AFS, annual financial statement? This mainly will come in the corporate topic part 2. Right now you don't have to understand this thing, but just if you're going to file a AFS with the IRS, annual filing financial statement, then you can go for a 180 days. This is for corporate mainly, but for individuals, till now they have came up with a plan, like till the time it will get withdrawn, still they are continuing 180 days plan. So please remember, in MCQ, if anything is asked, you have to select 180 days, not 120 days. For your exam, it is still in existence. Taxpayer relief initiative plan is there. That's why if you're entering into short-term plan, they are using 180 days. Okay, and if you're owning up to 250,000, you can enter into the short-term payment plan. Next is long term. Long term means it will be for 72 months. You will get 72 months to pay your taxes, and the refunds, if you're going to receive, let's say 72 months is like I can say 6 years, right? So in 6 years, you are going to pay the taxes. And during the 6 year, the existing tax return, whenever you're going to file that tax return, it can happen that you receive a refund. So every time when you get a refund, you will never actually receive it. It will get offsetted against this payment plan. Got it, guys? So first one is like here also we have two, three options. One is guaranteed installment. If you're owning up to 10,000, then IRS will accept the request, right? During the past 5 year, taxpayer has timely filed all the tax return. The criteria should be last 5 years you should have filed the tax return. And if you're owning less than 10,000, they'll not do any they'll not take more time, but they are going to accept it if your uh, the tax due is up to 10,000. Okay. And you have to agree to pay the full liability within 3 years. So this is the guaranteed installment plan. Next is streamlined installment plan. In that case, what happens if you're owning more than 10,000 but up to 50,000, then you can enter into a streamlined installment plan. So this is also kind of a plan where automatic monthly payments will be made, or you must complete an annual financial statement. Okay. Or you should agree with the direct debit installment agreement or payroll deduction. Payroll deduction means what? They will straight away inform your employer that while paying the salary wages, the minimum of let's say 2% or 3% should be paid to the government from their paycheck. Okay, that is a payroll deduction installment agreement. That is a streamlined installment agreement if you're owning less than 50,000. Clear, guys? Next is non-streamlined installment agreement. If the taxpayer owns more than 50,000, then it goes under the category of non-streamlined installment, where you need to do a lot of compliances. You need to paper file a form, okay, 9465, plus they will also have to pay within 6 years. So the 72 month will actually follow over here in the non-streamline. Streamline is what? Simple. If your amount is up to 50,000 and you are filing a AFS is like, your financial statements are reported to the IRS during the whole year. Whatever you are earning, whatever you have uh, expenses are there, everything is reported to the IRS in the form of AFS. But here, non-streamlined means if your tax due amount is more than 50,000, then you have to file the separate form. You will get 72 month, plus you also have to complete 433F, that is collection information statement. So collection information statement is means what? Let's say if you are also not able to repay this installment amounts, then all your assets, all your property will be lien and levied to recover that amount. Okay, that is collection information statement that will occur if it's a non-streamlined installment agreement. Okay, now maximum collection period is 120 month. This 72 month, if they want, they can more extend it, and they can maximum recover everything within 120 months. Okay, it cannot extend more than 120 months. Payment method, it is same. Whatever payment method are there in other installment plans, it's the same. Clear, guys? If you're not able to pay the taxes, then these are the two options. In second one, we have two more, that is streamlined and non-streamlined plans. So please remember this plans. One line MCQs can be asked, not in detail. Okay. Next is overpayment. If you're paying extra, let's say estimated taxes are paid extra, so how it will be settled off? It will be applied to their estimated tax liability for the next year. One option is like while filing the return only, you have the option to select whether you want to get the refund in your bank or you want to apply it to the next year's estimated tax, right? Can also be applied to more than one account, or wants to buy up to 50,000 in paper series I saving bond. So from your refund amount, you can apply to another accounts also. Another account means, let's say from your IRS, you are going to get a refund, but you have some other tax liabilities. Let's say some state taxes are there, some local taxes are due. Okay, estimated taxes you want to apply, then you can apply it to more than one account Or second thing is, if it is up to 50,000, you can purchase a Series I saving bond straight away from your refund amount. Instead of getting it in the bank, straight away you can get the whole amount deposited for purchasing the Series I saving bond. Okay. And you can also apply the refund, as direct deposit to traditional IRA, Roth IRA. Okay, you can deposit for as a contribution to the traditional Roth and SEP IRA, not a simple IRA. These three are allowed. But please remember, you will also get the same benefits. Whatever, we'll also revise the IRA topic again. Whatever benefit you are going to get in the IRA contribution, the same you will get even if it has been deposited through a refund amount. Okay, same treatment will be there. There will be no differentiation in that. Clear, guys? Now, filing a claim for refund. Now, within 3 years, you have to file a claim for refund. Within 3 years from the date of filing the original return, even if the return is filed in the extension period. See, whenever you file a return, in your return itself, you have to select a direct deposit, and that's it. Your refund will be filed. But if you're not filing, you're not selecting as a direct deposit, but you want through a paper check or something other than direct deposit, within 3 years you have an option to file a claim for refund. Means just like you're filing a 1040, just after that you have to file one more form to the IRS, that is claim for refund. Okay. Even if it is filed in the extension period and you are going to claim a refund, you have to file it 3 years. This will be from the original date, that is 15th April, or 2 years after the payment of taxes. Let's say you are claiming this refund for what? Your the withholding which is done by the employer, or you paid extra estimated tax. When you paid the estimated tax, let's say you paid the estimated tax in January, then in April, then in June. Okay, every quarter you paid the estimated taxes. So from that date, you have to calculate 2 years or 15th April. Okay, whichever is later. From that, you need to calculate the 3 years. For part 1 exam, there won't be any calculation part on the deadline of claiming the refund. This comes mainly in the part 3. So when you'll do the part 3 topics, you will see these things in your this main deadline. You have to remember those. Okay, when you have to file the claim for refund, how many assessment year are there, those things are come in the part 3. Next is 7 years you will get to file a claim for refund if you are having a bad debt and you are amending the return. Okay, bad debt means if your Schedule C is there or any corporate return is there in which they want to claim a bad debts. Let's say they already reported the sales, but in further year there is some bad debt. So they'll go back and amend the return. And in that case, you have 7 years to claim your refund. Right? So credit or refund is less than the part of tax paid within 3-year period if refund is claimed within 3 years from the date of filing the original return. So in that scenario, what will happen? The credit or refund, whatever you are claiming, should be less than whatever taxes you have paid in the 3 years. See, you have a 3-year deadline. 3 years you have time to file the claim for refund. Now, within this 3 year, whatever refund you are claiming for, let's say IRS, you're asking to IRS the refund of $5,000. So within this 3 years, whatever taxes you have paid should be at least more than $5,000. So that's why in practical life, what happens, as soon as you file your 1040 return, just the next day or within the 1 week, they file a claim for refund. They do not delay it by 3 or 4 years. This scenario will only come when you're filing an amended return. Let's say you are amending a 2021 tax return in 2023. Okay. Now, due to this amendment, you are getting a refund amount. Okay. Now, this refund, for claiming this refund, you have to file a separately claim for refund. This can easily be filed in 3 years from the filing deadline. Okay. Now, what this line is saying is, During the 3 years, you are filing the claim for refund in 2023. During the 3 year, whatever taxes you have filed, the total of that taxes should be more than what you are asking for the refund right now. They will not refund you. Like, let's say in 3 years total, you have paid only $4,000 as a tax in total. And now, if you're filing a claim for refund for 5,000, they will deny it. Okay, because it should be within this amount only. That's what this line is saying. Okay, if you're claiming a refund or if you want to claim a credit, then it should be within the taxes paid during the 3 years. Clear, guys? Same way, this will become 2 years credit or refund for taxes paid within 2 years. Immediately before filing the claim for refund is claimed after 3 years, but within 2 years after paying the tax. So don't get confused with this thing. It's just regarding the claiming the refund, how much is the eligible amount. Okay, these two part are anyways not going to be there in your part 1 syllabus. It's actually a part 3 topic, but just remember this one. Okay, 3 years one. If any mistake you have done while claiming the refund, straight away 20% penalty they will charge. They will deny it, and they will charge a 20% penalty if you have already claimed the refund by mistake. And let's say they are also not aware about it. They deposited the amount in your bank. Now in next year they came to know that there was a mistake while depositing this amount. You filed a fraudulent claim or you filed a wrong claim. They'll straight away ask you to pay back the amount along with the 20% penalty. Clear, guys? So this is a filing a claim for refund. It has to be done within 3 years. You can just remember there can be a one-line question on this. Filing a claim for refund can be done within how many years? It's 3 years from the date you file the return or from the original deadline, whichever is later. Okay, clear, guys? Now next is this thing. I hope everyone remember joint joint and several liability, and second is injured spouse relief, right? So I gave two examples while taking this topic. It's there in the first chapter in the regular book. So income which is not reported or reported in a wrongful manner by the spouse, for which taxpayer is unaware, right? Taxpayer is unaware means innocence. The person is innocent. Do you remember I gave the example of gambling income? The taxpayer plus spouse, they are filing a joint return. Now taxpayer is having some gambling income, spouse is not aware about it. When they file a MFJ return, he didn't reported any gambling income in his MFJ return, right? And in few years they received a notice. When you receive a notice, it will be in the joint name. It will not be just in the name of taxpayer or the spouse. It will be in the joint name. So spouse will then file for a innocent spouse relief because she was unaware about this income. This mainly happens, when already there is a divorce. They are already divorced. Okay, and in future, if IRS comes to the spouse and start levying their assets, that you have to pay the taxes, you are not paying the taxes, you are 50% liable, then she can save herself by filing the innocent spouse relief. Okay, I hope you guys remember this. I'm not reading everything, I'm just explaining you the concept which was there in the innocent spouse relief. And the taxpayer will be using a form 8857. Remember the form number. There was a question maybe on innocent or injured spouse for the form number. Okay, for injured spouse we will use the form 8379. Injured spouse, just remember that when a liability belongs to one spouse, then the taxpayer will be a injured spouse. Means what? Taxpayer plus spouse is not earning anything. She is just a house maker. Okay, homemaker. So she still have some investment. She has some shares and securities. She's not actively earning that, right? It's a passive income. She earns interest, she earns dividend. She also has some capital loss, or she has some business loss. Let's say she's not earning any wages, but she has some business loss. Since they are filing a MFJ return, all his income is getting settled off against the losses, because wages income is an active income, business income is also an active income. So it is getting offsetted against each other, and due to which this person, taxpayer, is not receiving any refund, right? Then he can be considered as a injured, that his refund is wrongly applied against spouse losses. So when the liability belongs to only one spouse, okay, the taxpayer is a injured. If he files a joint return and all the part of share of his refund is getting applied against the spouse, then it will be considered as a injured. This person will be considered as an injured spouse. Clear, guys? I hope injured and innocent spouse are clear. If you guys have any doubt, question, just let me know on this topic, liabilities relief. Okay, filing consideration is done. Any doubt? Anyone in this topic? Okay. All right. So we'll just start in few minutes. I have one more session to complete. I'll just quickly complete that session. Till then, you guys can just revise, come up with the queries. Next topic we are going to start in few minutes will be the credits. We are going in the reverse manner. Credits will not take that much time. We'll quickly complete the credits chapter. And then I think today we are able to complete the credits. In evening, we'll start with the taxes. Yes. Evening will able to stretch a little bit more. Taxes and then gains and losses. Yes. Okay. All right, guys. Krishna, I know you have sent me 2, 3 MCQs. I'll take those MCQs in the next session. Okay. All right. Don't miss the next session. We are going to take the credits chapter after a few hours. Like I've given you the timing exactly in the group. So please keep checking the group. I cannot message each and every one individually for every timings and all. Chawla, it is already there in the group. It's 10 a.m. right now. For you guys, I think it is 8 to 9, 9 to 10. After 2 hours, we'll start. I know, Prayasun, it will be too late for you after 2 hours to join, but don't worry. I'm available. That's why I'm taking the session to complete it. But you can watch the revision recording. That's fine, and it's the credit topic. I think you have already completed the credits chapter very well. So don't no worries if you're not able to join. Yes, after exactly 2 hours we are going to start. Okay, yeah, 10 a.m. Indian time. Okay, guys, thank you. We'll meet again. Bye.